Welcome back, everyone. Joining us now is Shindy Chen, author of the Credit Cleanup Book, a guide to understanding and improving your credit. Shindy, we've gotten the first interest rate hike this year, of course, the last one in December, and markets are expecting 2 more. So as someone who studies the average consumer, what does this mean for their pocketbook? What does this mean for their savings account?
Well, certainly.
And other things.
Yeah, I mean, for their pocketbook, I think the most important things are if you're in the market for a new car, the short-term financing for car loans, the rates on those are increasing. If you're a student and you're thinking about financing your tuition, student loan rates are likely to get higher. The government sets rates for fixed and variable loans in July, so it's not going to be immediate, but you are going to see those rates increase. Things like mortgages, if you're a home buyer or you're a potential home buyer, you're thinking about buying a new home this summer or spring, mortgage rates are increasing, and I have to stipulate that the Fed doesn't set rates for mortgages, but they do impact the 10-year T-bond, and that is what dictates rates. So mortgage rates are likely to increase. And then finally, the APRs on credit cards are going up. So if you have a lot of credit card debt, then now is the best time to pay down or pay off credit cards.
Right, exactly. Because if you make a substantial purchase, it's really that APR that over time you end up paying far more 5 or 6 years down the line than you did had you just paid the initial purchase price.
I mean, sometimes, well, a good example is, say, I went on a shopping spree last year at Bergdorf's and I bought $5,000 worth of shoes. Then if I continue to make the minimum monthly payment on those shoes, and let's say I have a 15% APR, then over 3 years I'll end up paying double for those shoes. So I better have really loved those shoes.
Exactly. So what are the purchases that people should prioritize here with interest rates rising? I would think a house, I would think the big purchases, right, over some of the durable goods, but the house, the car.
Yeah, the home, I mean, life is going to happen. You can't really avoid buying a new car or a home if that's what you really need. So for homes, I mean, now is the time to get ahead of the action because spring and summer are typically the busiest times. This is when real estate agents see a lot more foot traffic. So if you want to get ahead of the game and get pre-approved, get pre-qualified, then now is the time to do so. Rates, you know, last year the 30-year fixed rate was roughly 3.25%, and a year later it's at roughly 4.25%. So rates aren't going to, you know, spike overnight, but it is going to be a gradual increase. So the sooner that you can get into the game and the sooner that you can, you know, be in a floating position to lock when you have to, then that's the time to do it.
How about advice that you would give to people who may have differing credit or financial situations? Let's say people who have a very strong credit report and there's no, you know, no sense of issues there, or people who may struggle. Are there things regarding the prioritization of goods that they buy that you would say, if you're in this situation, do this? And vice versa?
I wouldn't say there's any prioritization in the goods that you buy. I mean, if you're going to buy things on credit, then ideally you would continue paying those bills down or off every month. If you don't pay your credit card bill off every month, then that APR is just going to continue hitting you month after month. So, you know, there's really no, you know, prioritization of what you need to buy ahead. If you continue buying things on credit, then it'll just be more expensive.
Sure. Now, we certainly see there's a lot. Credit Karma is one. They roll very cute commercials on national TV all the time. We certainly know Experian is another route that you can go to check your credit score. Is there a preferred one that you advise people to pursue based off your experience?
I think if you're more interested in just seeing your credit report, then you can go to annual credit reports and get a free credit report there every year. Credit Karma and Credit Sesame, those are going to give you a good idea of where you stand, and generally they are fed by data from Equifax or Experian. So ultimately, the score that you see, remember that that's not the score that mortgage loan officers are seeing or car loan officers are seeing when they're qualifying you. They get a general window of where you stand.
All right, Shindy Chen, author of the Credit Cleanup Book, thank you so much for joining us.
Thank you so much.